Right, this is a daily outlook into Monday, July 6th. This is obviously a new power of 3 here. And overall, this weekly open is opening again at around 50% here of this consolidation phase that the market has been in. We have to remember in terms of the yearly profile, so from a higher time frame perspective, that the market comes from expansion to consolidation, right? So our higher time frame bias, at least in my opinion, needs to remain bullish until proven otherwise. Sorry about that. And even when the market does go into bearish order flow, right, what we need to anticipate is that discount levels should hold price as support. Right, if not, overall, if the market were to trade, say, below the swing low of the consolidation, right, that there's a high chance that the market may sweep this level or displace this level, but right, being quickly followed by a reversal, right? So some type of balanced price range. And again, the reason why is because of the higher time frame trend. Now, I would have personally preferred to see it come back around the range of the weekly fair value gap. It hasn't done so, but overall price is still respecting the bullish order block here in discount. We can grade this level. Right, so you can see that the market is holding the upper quadrant of this level, still hasn't traded to 50% of this level. Okay, so if we're going to be bullish on a higher time frame premise, right, if this week offers a scenario where the previous week's low, right, and the low from a 2-week look back perspective is swept, and obviously I don't mean big closures or displacement, that's a whole different story. But if, say, this week, Tuesday or Wednesday provides this type of trade, this is a great trade, especially as a one shot, one kill. Okay. But overall, look, again, I do believe that because the market is at 50% of this consolidation, that this is a day trader's market here. Sure, there will always be opportunities in terms of one shot, one kill. But overall, maybe for traders that are positioned as short term or right swing trades, such as swing positions, such as the monthly profile or the quarterly profile, I would have said, right, if at the beginning of the month the market would have created here a fair value gap, then in that case, yes, this can be an opportunity to trade towards premium, but not only as a day trade, but as a weekly, a monthly, a quarterly profile trade, since overall price was coming from expansion to consolidation. But the beginning of the month didn't do this, although, right, it dropped lower. So as much as low as this can go, it's going to be very hard for me to turn bearish, okay, because of the yearly profile, obviously. But the thing is, the higher time frame bias, it matters, yes, but up to a certain point, right? On the lower time frames, at the end, as a day trader, what matters mostly, aside from the yearly profile, which may not be of relevance every single day, right? Now, it's good confluence when, right, you see the perfect buying opportunity, right? You see a buy profile, a bullish reversal profile. Now, obviously, having that higher time frame confluence is definitely helpful, but it doesn't mean that because the year is bullish that, right, there's no selling opportunities inside of the range. But again, what I'm trying to say is that this is a day trader's market, in my opinion. The fact that we're still trading around this range here, I do believe if you're a one shot, one kill, or a swing trader, would be best to see. Again, here we have an intermediate term low, right? We have this, and here we obviously have a long term low, right? You got Here was an old intermediate term low here at these levels. The market traded below it, right? Created another range of intermediate term low, and then once again another intermediate term low on the right. So we're looking at the range here of a long-term low in the market. Okay, so again, I'm primarily bullish. Doesn't mean that price can trade lower. If it does, I'm viewing that as a continuous consolidation, or as a retracement slash shakeout. Again, I'm going to be paying attention to both of these lows if they're traded. And if the market trades higher, right, which is what I'm biased for, well, obviously I want to see, first of all, this level reclaimed, right? This is the inefficiency at 50% of the previous monthly range. I would like to see this level being reclaimed, and then for the highs to be displaced above. Right now, there's a lot of, the range is pretty high resistance in here. The fact that it's at 50% is, it could go up, it could go higher. Honestly, I don't really know at the moment, and neither do I care too much. This does provide good day trading opportunities, right? These ranges that trade to OTE and fail. So again, overall, the daily chart is telling to me that this is a day trader's market. Now we saw that we have here a long-term low, right? Fills 50% of the weekly inefficiency. This is the range low. At the highs in premium, we have the range of a rejection block, right? So far, the market has traded twice inside of this level and failed. And right in the middle of the discount and premium, we have the inefficiency at 50% of the previous monthly range, right? And you can see that this inefficiency here has provided many day trading opportunities here, right? Many daily highs or lows forming around these levels also. And you can see that right now we're back to trading at 50% of this level. Now we'll look at this on the lower time frames. Okay, first of all, we can look at a 3-week look back. I mean, this is obviously a choppy range here, right? In fact, if you look at the price profile of this curve, right, you can see that the range is pretty balanced on both sides. And so far, every time it trades to 75 or 25% of the range, it fails and it revisits 50%. All right, so what's at 50% here will be important, obviously, since we're looking at a consolidation phase. We can view the range, I mean. So this is the 3-week look back range. Right, so at the highs, obviously, relative equal highs. At the lows, relative equal lows. All right, now you got to see what's inside of the range. 75%, so in premium, there's the previous week's high, right, which is an intermediate term high. Okay, so this is obviously a low-hanging fruit objective in terms of an open low high close profile, especially for traders that trade on a one-shot, one-kill, that would look to trade a one-shot, one-kill opportunity. I mean, this would be a great draw on liquidity in case the profile presents itself. In discount of the range, we have here a bullish fair value gap. This is directly tied to what is currently the open of, obviously it's not the open of Monday, it's the open of Friday, but since Friday was a bank holiday, this is included inside the day of Monday here. Why is it? Yeah. Yeah, exactly. Sorry about that. Right, so we set fair value gap here, located here at the new day opening gap of Friday. Right, this cuts right through the quadrant, At 50% of the range, right where price is basically trading at the moment, there's a large order block inside of the range. Right, I like this order block a lot because on the lower time frames, this is an intermediate term high. Right, and overall you can see on the 4 hour here, price traded above the swing high, and then the next candle was slammed low, right? So there was a raid on stops at these levels. Okay, so I do really like, and the fact that it's located at 50% of an overall consolidation. Right, I like this level a lot, and I want to see how price trades around this level. I do believe that this level alone should be enough to identify the low or the high of the week, all depending on how it's traded to. And then we saw it at 75% of the range, we have an intermediate term high here. Now I'll just grade the rejection block, right? But overall the idea is not the rejection block itself, but it's the fact that in case we see an open low high close profile, this should be the low hanging fruit drawn liquidity, being the previous weekly high. Now if this week will be an open high low close profile, then I do believe that this intermediate term high should be safe and the market should respect this range, right? Maybe something like this, right, to then trade lower. If it's going to be an open high low close profile, I don't believe that it needs to come back, to this high or to this high before dropping lower. Now it could, let's say, by creating a divergence with the S&P, and then that would probably be the nail in the coffin, in my opinion, if price were to reject one more time, especially if it makes a new high, say above the current monthly open, right, / quarterly open, were to trade again higher but fail, right, then I do believe that should be the final nail in the coffin to send price towards discount levels before continuing higher again. Okay, so I do believe that these levels are really important and should help you navigate the week, right? These are levels, well, they're relevant for day trading opportunities, but if you're a one shot, one kill trader, these are levels that you want to be scanning at key times of day. Alright, we look at the 3-day look back. Obviously in the 3-day look back we have the open of Friday included inside the day of Monday, as this day was a bank holiday. And I mean, overall these levels are pretty similar to the levels, right, that we saw on the 4-hour chart. You can see at 75% we have the range of, right, this is that same range here. Right, the range of an intermediate term high here, located right at 75% of the range. Right, so we want to identify the rejection block of it. You can see that at 50% of the range, there's a fair value gap. There's obviously this, right, the order block located right at located right at 50%, not only of the 3-week look back, but also of the previous weekly range here. Okay, so very, very important order block. This would become a great breaker if it gets displaced above. Right, takes out the highs, takes out the lows, and then from there price trades higher. Just as it is a great bearish order block, right, since it's an intermediate term high. And so we said intermediate term high located at 75% of the range. We said that at 50% of the range we have a fair value gap, we have a bullish order block, and at 25% of the range there happens to have here a fair value gap. Now, should you use this one or should you use the one on the 4-hour? Personally, I would prefer this one, since it's a bit larger. Right now there is one above it also, right, so maybe this is too small, but nonetheless it's a level I'm going to keep, right? So in terms of day trading opportunities, say, I don't know, whatever it is, right, price does something like this, well, in here there should should be used as an area for reaccumulation if the same day will end up trading lower and targeting these lows, right? So the low of Friday or the previous week's low. Okay, so these are levels that I think should be relevant for tomorrow for the daily profile, right? In terms of an open low high close or open high low close, I do believe that this should be forming around these levels. But overall, these levels will be helpful to you and to gauge order flow in the moment. Okay, so recap on the daily, we saw that this new week here is opening at 50% of the consolidation that price has been in. So, can it go higher? Can it go lower? Both answers are yes. Do I care so much? No, because again, I do believe this is a day trader's market at the moment until the market proves me otherwise. Now, obviously, the skill is to anticipate, right, when it's going to start proving you right or wrong. But, I do think that the timing of it, again, to me, what throws me off here about buying, buying this right here and anticipating that it's going to go higher, is the fact that it failed to create a fair value gap at the open of the month or at the quarter, right? Because the market came from two classic buy days, if you remember, right? And then Wednesday, the new month, opened and delivered as a classic sell. So at this point, if for short-term traders, for swing traders, I do believe that it would be best to wait for a rate on stops, okay, such as a previous week's low, the low of the 2-week look back, or the low of the range itself, right? And then from there looking for a trading opportunity higher. This could take time, right? Because June here was a swing to Z profile for what tells us that July here won't be a seek and destroy. For all that matters, the market can keep chopping here for a bit. Right? In fact, the first week it wasn't the first full official week of the month. The open happened to be inside of the last week of June. Right, so I do think this is even another reason at this point to wait. Right? The market failed to prove that it wanted to trade higher, created a classic sell when we're anticipating a distribution higher. So because of that, it's best to wait. This is a day trader's market at the moment. Right, and we're trading at 50% of the PD of interest at 50% of the previous range, the previous monthly range. Okay, so very choppy conditions here for short-term traders or swing traders. On the 3-week look back, we analyzed the range of the previous week. We analyzed the range of the 3-week look back. And we saw that we have a large order block at 50% of the previous week's range. This in my opinion, is the PD of interest for the week. I do believe that the way 50% of this level is treated, you should be able to gauge if, you should be able to identify the high or the low of the week, all depending on the profile that will be presented. We saw that in discount, we had the range of a fair value gap here that is directly correlated with the gap up from the new day opening gap of Friday. Right, that started the reversing here, this fair value gap. And we saw that in premium, we have the range of an intermediate term high, right, which is represented by the previous week's low. And the idea is that if the market will be providing an open low high close profile scenario, well, then I do believe that this should be the drawn liquidity. At least is a low hanging fruit drawn liquidity, aside from the relative equal highs, right, or vice versa, relative equal lows at the lows of the 3-week look back. And on a 3-day look back period, same idea. We analyzed here the range of the 3-day look back. We analyzed we analyzed the range of the previous day here, right, which was a New York reversal, right, and then we saw that price here gapped up on Friday, right, bank holiday, and started trading higher, inversing the PD rays left in discount from the New York reversal here. Right, and we saw that this range left an intermediate term high, right, it left a fair value gap, and the other level of interest that we had in discount was the range of a bullish fair value gap located at 25% of the 3-day look back. Right, and this more or less aligns with this level here. Okay, so I do think that that's enough for the moment. I've tried to look at some standard deviations. Personally, I just find it too choppy. There's nothing really interesting in these ranges, right? There maybe still is this in play here. Right, this could be a, you know, potential standard deviation, but again, this may be a bit too forced. I do think at the moment, just again, it's a day trader's market. That's the idea. Till the market starts proving otherwise, I do believe that just focusing on the levels that daily and weekly ranges leave behind, right, and putting emphasis on that to try and identify daily highs and daily lows. Well, it's always the most important, but even more in this situation where your ideas can't be backed up, say by the formation of a very obvious swing point where you say you could grade that level, right, and identify where it could trade to. I don't think that inside of these ranges is necessarily possible to do. Okay, so this is where it's important, is even more important, right, to pay attention to what's happening inside of ranges, to read the previous phase of price delivery, right, inside of look back ranges, and being able to take obviously to analyze the market, but most importantly take a trading decision from there. Okay, so I think everything's covered, so good luck and good trading for this week.